Google, gold, and Apple. These are hot investments. What better things to look at for portfolios? Now, you know, Google and Apple have always, we talk about those all the time, but gold, we're bringing that one up today because Warren Buffett brought it up, so we better take a closer look. We'll cover those topics today. So this is a financial education presentation. You must do your own due diligence on anything you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So gold, that's not a topic we normally hit. So I said, let's talk about that one first before we talk about what we really are experts in. But I saw this Warren Buffett's master class on the problem with gold. So that made it even more intriguing because, as many of you know, gold has had a fantastic year. And guess what? When you think of things that you invest in, gold is probably the longest running thing of all time because it's thousands and thousands of years of investing, although we haven't tracked the price that far back, and none of you owned it back then. So anyways, gold hit a record high Friday, $4,300 an ounce. And Corey, just so you know, one time I decided, I said, I'm going to see if I'm actually worth my weight in gold. So I, calculated my body weight times, ounces, and no, I'm not. There's no way. Gold's it's many, many millions of dollars. So I just had to laugh. I'll never own my body weight in gold. Maybe you will, because
I think I can tell you why we're at a top in gold, Mike.
Why?
Because over the weekend, I'm kind of going through the house, trying to figure out what gold do we have in the house, how much is it worth, and is it worth it? Is it worth it to sell now? And I feel like that has to be a sign of a top.
Yes. So, if I went in the dentist and they said, "Do you want a gold filling?" I'd be like, geez, can't you just fill it with Bitcoin? I don't know. Yeah, probably not. I'll take steel. Anyways, so here's the key part of this article that I really wanted to call out is in the past, you always hear of a 60-40 split of stocks and bonds as being a diversified portfolio. And I know this varies by age and aggression level, things like that. But now, with bonds being impacted by, Feds reducing rates and that, now they're talking a 60-20-20 split, 60% stocks, 20% bonds, and 20% a mix of gold and Bitcoin. So maybe we were on the front end of that with the Bitcoin side because they mix gold and Bitcoin together. And while gold is at an all-time high and Bitcoin is close, I mean, it was at an all-time high 2 weeks ago, but 2 weeks can change a lot. The key is scarcity. So it's not that gold or Bitcoin, you go out and put them to work, because you really don't. I mean, I guess there's gold and jewelry and you can take loans against Bitcoin, but it's not like owning a stock. It's really based on scarcity. And I think this is where Buffett is a little bit, hitting on this. Gold would be right in his expertise. I mean, Bitcoin came out way after Warren Buffett, who is now 95 years old, started investing. But I thought this was interesting. Look at this right here. Over time, Buffett has said gold is inferior as a long-term investment. And that's mainly because you can't put your gold out to work. Really, all you can do is protect it. But in the short term, which clearly short term being in 2025 or being in times of major inflation, gold is a good investment, or at least it has outperformed stock markets. So, Corey, what do you think? You going to put some Bitcoin in, for your teeth? Would you rather have Bitcoin or gold? There's a question for you.
First of all, I take very good care of my teeth. I've already brushed today and flossed, and there will be more of that happening today. And so neither. But for now, I do have some Bitcoin, not investment advice. I do have some gold, Mike. You know that here. Mike, we got that Aggie ring, and
Oh,
again, it's like, do we sell it here? But we're 7-0. I can't sell it when we're 7-0. You know.
Corey found a way to bring Texas A&M, who's undefeated and ranked number 3 in the country. Of course, he's talking to a guy that went to Ohio State, which is number 1 in the country. But Corey, I'd enjoy it while you got it. I looked at the Aggies schedule. There's no way they're going undefeated the rest of the year.
Whoa!
No way. So I'd put gold on that. Anyways, but you just got to enjoy it while you have it. So.
Oh yeah.
Okay,
Oh, yeah.
Talking about enjoying it while you have it. Most of you have Apple stock, and Apple stock is hitting an all-time high today. Why? Here, they always ask why. Strong iPhone sales in U.S. and China. Yay! People are buying iPhones with the latest update. I'm still on my 16. I haven't went to I don't know that there's a reason for me to upgrade to a 17, but some people are definitely getting 17s. So let me show you the Apple stock price. So this is a year-to-date graph, and you could kind of say Apple was down most of the year. I mean, they certainly were. If it started the year right around $245 a share, really that yellow line, it was down below that most of the year until recently. So we love to see that go up. Does that mean Apple is a big outperformer this year? I wish that was the truth. It's not. It's actually lagging the S&P 500, and that's what I wanted to show. This is a graph. The shaded part is the S&P 500. Apple is that light green line. And then Microsoft is the blue line, and NVIDIA is the orange line. So you can see these are the 3 biggest companies in the world, and they are the 3 biggest components, probably almost 20% of the S&P 500. So they're gonna correlate at least somewhat with that S&P 500 graph. But you can see that Apple is just catching the S&P 500. This is a 1-year graph. Apple is just catching it. It's almost like it's gonna, but you can see for most of the last 6 months it lagged it, whereas NVIDIA and Microsoft are quite a bit higher. So importance on keeping a diversified portfolio. If we didn't believe that Apple was going to do much better, which we do believe that, it wouldn't be in your portfolio, but it will continue to be because Apple is just a fantastic company. Corey, any thoughts on that graph? Does that surprise you at all?
Talked about, right, is that you can own some of these things, and they're not going to outperform the index every month, but you click a 5-year, and I don't know if you can click a 5-year or an all, Mike, but over long periods of time, right? The cream rises or whatever. Yeah, NVIDIA's ruining the chart.
NVIDIA's ruining the chart. There you go. That's a good quote there. That might be the only thing NVIDIA's ruining right now. With that, take us to another one of the Mag 7, which is Google.
Yep, Google all-time highs today. We saw this over the weekend, and I'll be quick here, but some data comes out, and data gets published all the time about who's getting what traffic, and traffic ebbs and flows. We can note that when Google had posted a declining share of search volume for the first time, like this year or last year in one of those quarters, where they lost something, they went from 90% market share to like 89.7 or something, and everyone freaked out. It can be noted that we held and added the stock through that time. So here you could see that OpenAI is now giving share to multiple competitors. DeepSeek had their moment to shine, but really you're seeing that Google Gemini take share in a meaningful way now. And it's like, is OpenAI, do they really need 90% share? I mean, where does it average out in the end? Who knows? But for now, they are giving some share back to Google. which has obviously benefited Google shareholders. And then, you go check out Google hitting all-time highs today, similar to what you saw on Apple. It's not quite up as much as Apple today. And then year to date on Google, you're in a little better shape, 192 to 256. So you're beating the market there. But again, you weren't beating the market for a time, and when it's those high conviction companies, we'll take advantage of those opportunities when we can.
That's right. That's right. And I do think it's interesting when you showed that graph. You don't need to bring it up again, but the open AI, and is it all right to have 90% of the market? And you always want to say, of course you want to have 90% of the market. That means you're like the best and you're blowing everybody else away. But when it comes to new technology, that graph automatically made me think of Netscape.
Sure, yeah.
When you think of web browsers and you had Netscape, and I'm sure any of us that are my age used Netscape at least at one point. And then things change. You have Netscape, you have Explorer, you have Google Chrome. Things go away. Napster probably had 100% of music share files, and yet now we've got Spotify. So, anytime you start getting those high percentages, one, you're a massive target. Everybody wants to take your business, but you're also at least a slight target of the U.S. government on a monopoly. So probably good to get some diversification there. And it's good that Google is getting a piece of that. So,
absolutely.
All right. Well, thanks everybody. Tune in tomorrow. We'll give you an update on which two teams are eliminated. That's always our Tuesday fun special, and a tie-in from fantasy football to stock investing. We'll have that tomorrow for you. And Corey can live at least another week with Texas A&M in the top 5. We'll keep the count on that as well. Thanks, everybody. Bye.